Trading doesn't occur there. It doesn't occur in dealing rooms. It doesn't occur anywhere other than between your ears. That's it. That's where markets are and where they occur.
So Christopher Tate, welcome on the podcast. How's it going today?
It's going well in sunny but very cold Melbourne down here in Australia.
You were just talking about the weather before. Melbourne's like really interesting for the weather. Always changing, always different. Can be bored.
Look, they say, when you come to Melbourne, prepare for 4 seasons in one day. And you can actually get that.
That's the funny part. So glad to have you on the podcast. It's been a while. We've been trying to schedule an interview together, and I'm glad that you can make it today and we can do it. So I want to start with one question. So my first question is about kind of a quote that you resonate with or that inspires you.
Look, my view of trading is really quite simple. And I think the impression people will get of me is that my approach is really, really quite simple. In trading, the intrinsic quality you need is one of resilience. So I always default to, there's a wonderful Confucian saying which simply says, fall down 7, get up 8. And that's the nature of trading. Trading is a profession whereby you have to continually pick yourself back up. And the image I always have in my mind, and this is showing my age, is that when we were kids, we used to get, at Christmas, you'd get those little clowns. They'd stand about 1.5 metre, 1.3 metre tall. And you'd blow them up, they'd have sand in the bottom. And so that when you hit them, they always bounce back. And that's my view of the perfect trader, is someone who just continually gets hit and bounces back. And I think that's the bit that's missing from when people talk about trading. People always talk about the indicators, how much you can make. Occasionally they'll talk about money management, which is very rare, but they very rarely talk about resilience, and even rarer is talking about courage. Unfortunately, trading is a profession that requires courage, and it requires courage because you suffer an infinite number of knocks until you actually finish trading. But it also requires courage in that markets have this awful habit of showing you who you actually are. People have a vision of themselves, and that vision might be that they're rational, calm, controlled. Markets have a way of holding up a mirror that says, look, that's the way you think you are. What you are actually is ill-disciplined, illogical, irrational. And you've got to have the courage to look at that true reflection of yourself and go, well, it's not working as I am, so I actually have to change.
Yeah, and that's quite difficult. People think that they can change by changing a strategy, like you said before, but they don't think that they have to change by changing themselves.
And that's the thing. People think that if they, let's use a simple example, that if they've got a chart with a 30-period moving average on it and it doesn't work, they think that by changing to 40 periods, that works. And it doesn't, because the driver doesn't change. And the driver is the individual. And without the capacity to look at yourself and go, well, I really screwed that up. And why did I screw it up? Then you really get nowhere. And I actually think there's no cognitive impediment to trading. There probably is someone somewhere who is too stupid to trade, but they'd have to be pretty dense. The impediment is that people just can't control themselves. They can't reflect upon what they do. They can't sit down and assess themselves like they're a trading system. They can't sit down and go, well, the system worked here, but I didn't. And I worked here, but the system didn't. So they can't do this form of analysis to actually get to a point where they become profitable.
That's really interesting. I think we're starting pretty strong. That's pretty good advice so far. So I want to go back in time. I want you to tell people kind of what was your trading story. So how did things started and how did that evolve over time?
I think probably like a lot, I got started accidentally. I don't have undergraduate training in finance or business. My career path was set on a completely different trajectory. My academic gig, which is where I perceived myself to be going, was as an immunologist. My academic and research interest is the human immune system, and that's what I had trained to do. But I'd encountered a few things. One is I don't know what the university system is like in your area, but here it is rife with politics. There's problems with funding. And I was getting a bit sick of that. So I was doing some work for industry. And here in Australia, in the very early 80s, we had an emerging biotech sector. So that really interested me. But at the same time, I had a friend who I'd gone to graduate school with. And she had a friend who's a stockbroker. And that fascinated me enormously. And for some reason, and I don't know why, to this day, I still bang my head against the wall and wonder why. I thought that if I became a stockbroker, I'd actually learn about trading. And I can never decide whether it's the best decision I ever made or the worst. Because what I learned, I talked my way into a stockbroking office, and stockbroking here in Australia was fairly unregulated in the early 1980s. And when I rocked up on the dealing desk, the bloke who sat opposite me had been selling carpets 2 weeks before. The bloke beside me had been selling cars. I was the only one who could add and subtract, and they thought that was black art. And that sort of kicked off the formal part of my involvement in the industry. My involvement as an investor goes back a little bit earlier, and I had the worst thing that could ever possibly happen to a new investor. The first trade I bought, or the first trade I put on, went through the roof. And being somewhat egotistical, I actually thought that was me. I thought it was something I'd done. I hadn't actually realised that we were at the very, very, very early stages of the 1980s bull market, and that everything was doing that. And so in a sort of truncated way, I came via thinking I was much cleverer than I was, and entered into stockbroking, think that they'd actually be able to tell me something about trading. I was mistaken on both counts.
And so what happened from there?
What happened from there is I stayed in stockbroking for several years, and I actually used it as a mechanism to teach myself, because it gave me access to information, it gave me access to a floor. For a while here in Australia, we still had trading floors up until 1987 when we went fully electronic. So going down to the floor sort of tweaked in me the interest of understanding that markets moved on emotional sentiment. It was what people perceived that made them move. It wasn't necessarily an event. There are some times when an event is a catalyst, where you get an horrific event like 9/11. That is obviously a catalyst for markets. Or when you get an event such as the GFC. But on sort of the micro day-to-day scale, things move because of people's perceptions, because of the way they feel about something. Here in Australia, we have a resource-based economy. So when people get all excited about resources, irrespective of what they are, will run. And so it was being on the floor that sort of piqued my interest about that. One of the problems, though, we have being here in Australia, particularly in the 80s, and this is long before Amazon, is that we're so damn far away. So in terms of getting any information or books about quantitative trading, which interested me, technical trading, it was extremely difficult. And it was extremely difficult for the simple reason that often books you would buy here in Australia would not come to Australia. They'd actually go to Austria, even though it's spelled completely differently. And so that was problematic. So it was a matter of learn on the job. And I eventually got sick of stockbroking, and to be honest, I got sick of the people in it, because when I was involved, it was fairly unregulated, they were uneducated, and in many ways unethical. And I simply got sick of it. And so one day I just decided, I literally had one of those sort of, what do the young people call them now, mic drop moments, where I just said, that's it, I'm done. And then you're left with the sort of problem of, well, that was a good move, genius. What comes now? And so the thought of not eating or being able to pay for your house does tend to concentrate the mind, and it does tend to focus your attention on getting yourself organised. And there were a few bumpy years there trading for myself. But again, once you get over that psychological hump of, trading is really quite simple. In terms of the rules, it's really easy. Buy things that are going up, sell things that are going down, don't bet farm. It's not, anybody can do that. And tools you can generate to, identify those things are not hard. It's not difficult, despite what people say. Again, what is difficult is I struggled to get over myself. Because of my academic training, I perceived the market was an external problem. It was a problem out there that I had to solve. It dawned on me after several years that the problem was actually an internal one. The problem was me. And once I began to work on that, then I won't say things became easier, but they became more obvious. My mistakes became obvious. I could see why I had gotten something wrong. And it's simply because I turned the mirror around to look at myself and not the market. And I see this in new traders. They spend so much time looking at the market as if that's going to give them an answer. Markets are simple and they're profoundly generous in that they'll tell you everything you need to know. You just have to listen. The problem was that I couldn't listen because I always had an opinion, had an idea, thought better, knew better, was cleverer. And once I got rid of that as a default setting and accepted that I don't know anything, but more importantly, nor does anybody else, then things became, that opacity that markets had began to fall away. And things became transparent for me. And once you can do that, you can start to see opportunities. And once you can see opportunities, you can actually become profitable.
That's nice. So it's kind of like coming to a book, but instead of coming up with your own ideas, you try to read the book, if I understand well. It's awesome.
Yeah, very much so. Very, very much so.
So what is your trading style these days? Is it a mix of fundamental and more like chart analysis? Or is it, because I think based on your history and your experience, you're probably tending more toward looking fundamentals like data and the market?
Actually not, because I started off, when I started off in stockbroking, everybody buys Benjamin Graham's classic little Bible. And I looked at that and thought, what's it actually telling me? Because one of the problems I had is that when you see trading floors, there's a disconnect between perception and reality. And the thing that wins is perception. Reality is, it's an artificial construct, and everyone's reality is different. The only reality that matters is the markets and your perception thereof. And so I quickly ditched the notion of looking at fundamental data simply because I couldn't marry cause and effect in any way, shape or form. I just couldn't see it. It's the old thing of companies would come out with magnificent announcements and their share price drops. Why does it do that? Well, it does that because of investor sentiment and perception regarding the announcement. The data itself won't tell you that, but price will actually tell you that. So I'm simply price-driven. Everything I do is price-driven. So, it's very, very simple. I buy existing trends and I buy breakouts from existing trends. So it's really simple. And it's about 3 lines of code, which is the thing I like the most, because I believe that the world's a simple place and can be understood by simple ideas. If you've got a very, very complex system, then it's probably not very robust. And one of the books I like people to read, despite not liking the individual that much, is Taleb's Anti-Fragile. And it's this notion that things need to be robust, they need to be tough. And things are made tough by being simple, but also by having skin in the game, which is a wonderful expression. My trading system suits me because I put my money into it. I think one of the problems people have is that they invent trading systems that they don't put money into it. I see this all the time on LinkedIn. I regard LinkedIn as Facebook for people with a job. And my LinkedIn feed is constantly getting posts by people with these magic algorithmic systems that apparently make more money than God. The problem is it doesn't seem to be making more money than God for them. And that's the issue. The moment you put your money on something, your mind is concentrated. And my mind concentrates on being a trend follower and buying breakouts. I love simple things. I love simple ideas.
Okay. Were you always tending towards something simple, or did you have to kind of force yourself to be simple?
I had to force myself, because you come from an academic background, and particularly maths at university. There is this thing that powerful equations are both elegant and beautiful, but part of their beauty is in their simplicity. Some of them are not very simple. I mean, we all know about E equals MC squared, which is a wonderfully beautiful statement of how part of the world works. I had to force myself to be simple. I had to force myself to adopt the idea that if I put up a chart on the monitor, I could walk to the back of the room, turn around and instantly see what the trend was without putting anything on the chart. And one of the things I always counsel new traders about is to subtract, to continually subtract, because every alteration you make to a trading system has to increase the fidelity. And as you add more information, you don't really add greater fidelity. You just tend to cloud what's occurring. But I also see in some ways a little bit of the reverse occurring, in that some traders opt for immense granularity. They drill down, 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 until they encounter the problem that we used to talk about at university, is that then you know everything about nothing, because your perception of what you're seeing is so tiny, but you know everything about it. But is that relevant within sort of the broader context of what's happening? And I just like to see big, broad trends, buy or sell something, and then do nothing and let the market do its thing. Because I find that when I interfere, I bugger it up. I just get it wrong. If I let the market do its thing, it does its thing, we're all happy. If I interfere, I get it wrong, we're all unhappy.
So what would be your advice for people that want to do this? They want to be able to just take a trade and go away, but they can't seem to do it. Like, they can't seem to just leave it there and let it run.
Yeah, I don't want to be... One of my favourite books, and I think it should be in everybody's library, are the Market Wizards books.
Yeah.
Just simple reading. You can pick one up, open it a chapter, read it over breakfast or coffee, and they're really good that way. But some of the insights are very powerful, and Ed Sakota makes one where he is asked, what can a losing trader do to make themselves a profitable trader? And he says nothing, because they'd already be a profitable trader. I actually think that's a little bit harsh. I actually think it's a little bit depressing too, because it says there's no hope. Because the issue is we all begin as unprofitable traders.
Yeah.
There's very, very few who from the get-go just get going. And if they do, I would posit that that is luck more than anything else. And there's bound to be some unlucky. Somebody wins the lottery. You know, we've had people here in Australia who've won the lottery twice, 3 times. That's not skill, that's luck. There's obviously those people in trading. But for everybody else, for us mere mortals, us non-Ed Sakotas, you actually have to sit down and think about your role. What are you doing to get things wrong? Because my view is that most trading systems that are trend following, that are breakout, that have good money management, work. If you run them through any form of backtesting agent, any variation of that is profitable. Stress test it, any variation of that is profitable. Why does it go wrong then? And it goes wrong because, as we said, because of the driver. People who can't look at themselves and work out what their role is are the ones who struggle. For example, we have a trader in one of our groups at present who struggles to allow positions to run. So they, when they hit a certain level of profitability, they're always closed out. The problem with that from a trading perspective is trading systems depend on outliers for their profitability. But it's a reflection of their need to be validated that they're right and to perceive that the market is a job. You get paid regularly. And they can't simply let themselves go and leave it alone. And they're struggling to reflect on the reasons as to why that might be. There's obviously a fundamental insecurity there. And until you can identify your own failings, your own weaknesses, your own insecurities, no system in the world will work for you. It just seems to be one of the unwritten rules about trading. It is always the driver of the system, but people don't want to know that. People want to be told they've got the wrong moving average, they're using the wrong charting package, they should be using MT4, they should be using this version of MT4, the background colour of the screen should be different. It's none of those things. It is, what are you thinking when you sit down to put a trade on? Okay, the trade's now on. What are you thinking now? You shouldn't be thinking anything. You should just leave it alone. You have a stop in place. You have a plan in place. And until people can get to that point of reflection and of understanding their role, then trading's always going to be a problem. And it's this notion that there's an internal locus of control, not an external one. Trading doesn't occur on wherever they now have trading floors. I know the US still has trading floors, which is a little bit primitive because the rest of us have grown up and gone electronic. Trading doesn't occur there. It doesn't occur in dealing rooms. It doesn't occur anywhere other than between your ears. That's it. That's where markets are and where they occur. But that is a need for an understanding that you have an internal locus of control. Markets don't do anything to you. Markets just do their thing and you react. Once you understand why you act the way you do, then I won't say things become easy, but they become transparent. And you can see where opportunities arise.
So you must be a fan of some sort of journaling and writing things down to understand yourself.
Journaling is an immensely powerful tool. And unfortunately, there's very few psychologists who are trained directly in dealing with traders. We're fortunate here in Australia in some respects because we have a national obsession with sport, which is just insane. It doesn't seem to be replicated anywhere else in the world. But what that means is that we have a lot of sports psychologists who are going around looking for work, which means that, you can always drop in and see one of those. But the first step is write down your thoughts. Write them down first thing in the morning. Write them down as you trade. Write them down as the trade ends. Now, writing them down is only part of the battle. The rest is actually reading them and understanding what you've written and then having an action plan based upon that. So you can course correct your own emotions. You can course correct the way you are. But it takes work. And there's that awful word. When people come to trading, they don't understand that it's work. It is actually a grind. My day involves doing the same thing in the same way every bloody day. It never alters. It's a production line. That's just the way it is. And it's very difficult to convince people that it is work. And those people who understand that it is work and not that they're going to be ringing their broker, yelling, buy this, sell this, cover that most of the time they'll be doing nothing. They're the ones who seem to be able to sit down with their thoughts and go, okay, what am I doing and why did I do that? But it's understanding that it's actually work.
What does your typical day look like then? Is it a series of routines or does it kind of vary?
No, it's actually a series of routines. I'm a routine person, so I'm actually pretty dull. I'm an early riser. I'm always up before 5. Wander out, make tea, switch the PC on, check the overnight prices to see if there's anything I need to do if the system's thrown anything up as a preliminary signal before the full close. If there's anything that's been stopped out, there's generally not much to do, and that takes no time at all. And then it's off to the gym. And once that's done, it's generally gym, breakfast, come back, check the formal close on those markets that I trade that have an overnight close. And there's generally not much to do. Move stops, prep orders for the evening. And that's really the end of the trading day, largely even for, I run also a 4-hourly system. So even for that is largely the end of the day in terms of trading. I'll check again as the UK opens, particularly with FX, because the UK is the largest sort of trading venue for FX. And if there's any savage move going to come, it will come out of there. But again, there's generally not much to do other than enter the orders for overnight, so they're all contingent. And then the routine starts again the next day. And the only variation to that is that on the weekend, I have an equity system that trades using weekly data. So on a Sunday, download the weekly data for equities, run my system over that, see if it throws up anything. If it does, prep the orders for Monday night. That's it. We're done. Mm-hmm. So it's actually a really boring profession.
And you are using algos to take your trade, or at least find the setup?
Largely, they're very, very simple. There are a few lines of code that I use to scan. And so they're either done. I have a tiny series of markets, or a small universe of commodities and indices I trade, which I can actually visually scan. They will all fit on my monitor. And it's just a matter of yes, no, that'll do, sort of thing. Scanning equities is a different matter. And I actually use a really simple program. I use Metastock for that, because I run a very, very simple breakout system. It can be coded into that. But it's actually very good at mangling all the data I require, because I trade US equities and domestic equities here in Australia. So there's a few thousand bits and pieces to go through. And it is much better to let a machine do that than to go through it by hand.
Yeah, it's definitely less time and easier to not make a mistake, which is a good point.
And that's the thing. It is about bringing efficiency to the system. Mm-hmm. And once you're efficient and you have a routine, then it's very hard to get it wrong. You've actually got to work hard to deviate from the system. And because I'm rules and routine based, things just flow. It's just easy.
Mm-hmm. I've seen a lot of people that want to jump into trading with algos, or at least have algos that they can use to find trades or trade with them. But the thing is, some people don't know how to go into it, or they're not sure if that's the right time for them to go into it. Like maybe they have to wait a little bit. So what are your thoughts on this? Did you went from manual to algo, and how did that happen exactly?
I think it went simply from, I regard, if we're to look at trading as a business and to say, what sort of business is it? It's actually an information management business. Because when I first started trading, the only stocks I could trade, or the only things I could trade, were those listed on the Australian Stock Exchange. Now, let me take a step back. I started so long ago that exchanges in Australia were split into exchanges for each state. So we had one in Melbourne, had one in Sydney, had one in Perth. They're all over the place. So I can only trade what I could see directly in front of me. The problem now is that I can pick up my phone. If I wish, I can buy stocks in Finland. I would have no idea what to buy, but I can do it. And that amount of information hitting the trader is very difficult to manage. So part of the battle is deciding what you're going to trade, where you're going to trade it, and not necessarily how you're going to trade it. Moving to the idea of saying, well, this is what I look for manually. How do I get a machine to do it? Was really quite simple. Because of my background, I'm actually used to writing things in a set fashion that machines can understand. Mm-hmm. And if I can't get a machine to understand it, I know people who are cleverer than I am who can, and who will do it for me. A lot of people, unfortunately, because they're not rules-based, struggle to enunciate what they would want a machine to do. They don't know what to tell it to do. If you can't write sort of your trading rules down in a coherent manner on a sheet of paper, then you can't convert that to code. And that's part of the problem for people. They can't get to that point where I wanted to do A, then B, then C, then D. What they generally do is they go, I've got A, I might read the paper for a while and see what it does. Well, that's not translatable to any form of machine language. You wandering off and watching Fox Business is in no way compatible with the idea of the way a machine thinks. And so again, it's that capacity to be logical. People who are logical and simply write down their rules can convert them to code. I actually think machines should do most of the work. And I actually think rules should do most of the work, because if we look at the literature, if you look at the literature virtually on any high-performance endeavour, systems, rules, algorithms beat humans in decision-making process. They just do. For example, if you look at, here in Australia, we have a problem with skin cancer because we spend all the summer outdoors getting baked. We've actually found that artificial intelligence, which runs a series of algorithms, are better at identifying skin cancers that can turn malignant than dermatologists can. Rules beat humans in everything. And so if you can get to the point of simply going, my rules are A, B, C, and D, then this becomes easier. You can actually do that. But most people get stuck at the first step. They can't write down their rules because they've not thought about them. They generally trade on, what they heard down the pub, what their idiot brother-in-law says. They saw something on TV. They saw something in a shop and went, well, this company makes widgets. I like those widgets. I'll buy the company. They're a series of random inputs. They're of no value.
Mm-hmm. Or I think the fact of being, especially online on social media, can bring you a lot of ideas straight that people should not necessarily use, I think.
Oh, look, I do, in many ways I'm envious of new traders because there's so many opportunities in markets.
Yeah.
But in many ways I actually feel sorry for them because they're bombarded with noise. And social media in and of itself is noise. And I'm wondering, just as a sort of general philosophical point, in 20 years' time, we're not going to look back at social media the way we now look back and regard smoking as a health hazard, as something to be avoided. And new traders are subject to so much noise. When I talk to people, it's amazing the amount of gibberish they have in their head. I was sitting in a cafe last year, very, very early last year, and I overheard a young girl talking to another young girl, and they were talking about trading, which is unusual to hear in a cafe. And one of the young girls was trying to explain trading and was referring to all sorts of social media and was referring to all sorts of basic crap. And one of the things they referred to, and one of the things she said was, you need to buy Bitcoin because they say it's going to $1 million. Yeah, I must have missed that because I don't think it did. And this is the thing, people are overwhelmed with noise. And I do feel sympathy for them because it is difficult for younger traders to filter that out because social media is such a part of their day. It's part of the way they interact with the world and each other. So learning to filter one particular section out must be extraordinarily difficult. It's something my generation don't have to worry about.
Yeah. What would be your advice for people that are feeling confused or overloaded with information and they cannot kind of find out what to focus on?
One of the things I try and get people to do is to simply set up a watch list of charts. Pick an index. Pick the S&P 500. Convert the charts to a weekly format. Convert them to a line chart. So it's the least amount of information you're receiving as possible. Pick a moving average. Set it up as a template and just sit there once a week scrolling through, just one by one. You're not looking to see anything. You're just looking to observe. And what you'll see is something really, really, really interesting. Markets trend. and there is always something trending. And it is getting used to that notion that trends persist and they go far, far longer than you will ever imagine they will go. We all have this notion of we think what something is worth. I keep a series of charts here on my desk that I look at to remind me that I have no idea how far something will go. And charts will go, price will go much further than you could ever imagine. Think of it this way. Think of an example. Think of Enron, one of the greatest scams of all time. Nobody imagined that when Enron began to collapse that it would go to zero. But it did. It went far further than people could ever imagine. It didn't stop Wall Street recommending it all the way down as it crashed and burned into the ground. But it still went far further than you can imagine. The reciprocal, Facebook. When Facebook listed, people were going, Facebook's dead, young people just don't use it, it's rubbish. Look at the price now. Prices move far further than you could ever imagine. And so it's convincing yourself of that. You convince yourself of it by seeing it in repetition. And a good data set is the S&P 500. It's small enough to view just by flicking through it once a week. It's also of a reasonable size. Once you get a sense of what you're seeing, to go, well, I've seen that when price moves X amount above the moving average, the trend seems to persist. Okay, I can write that down. If I can write that down, I can probably code that. Okay, I can code that. Let's run it and see what we see. And it is that start simple with simple in mind.
Mm-hmm. And I think convincing yourself of that is good for two things. So first of all, if you know that trends are going to persist more than you think, then you're not inclined to keep a trade that's losing longer, because you might be losing even more. And at the same time, you're more likely to let your profit run, which is a good thing also.
And the thing you mentioned first is the really key statement. It is accepting that when it's gone wrong, it's gone wrong.
Yeah.
And it going wrong is not personal. The market's not launching a personal attack on you saying, you're a peanut, why did you buy that? It's simply a function of the way price acts. It's a little bit like, if I head down the beach to go surfing, there are days when the waves are rubbish. You sit out there and you go, I'm shark bait and freezing. There are days when the waves are brilliant. There are days when the waves are brilliant and one of them smashes you into the ground. One that smashes you in the ground is not doing it personally. It just is a function of the way it is. And losing trades are simply a function of trading. It's not a personal attack. It's not a reflection of your ego. They're not telling you you're stupid. But you need to understand there's no nexus between being right and making money. If your payoffs are high enough on average over time, you can have a trading system that's right 30% of the time and still make a great deal of money. In fact, that's how most trend-following trading systems work. They have a hit rate that is below random, but their payoff when they win is so high because they just hold the winners. And they don't, as you say, let the losers kill them.
That's a great point. That's awesome. Now, I know some people, if they were to do this, to kind of look at a chart, and like a weekly chart for some time, they might get bored, or they might feel like things aren't moving fast enough, and then they might stop and go back to trading and just getting straight quickly.
Yeah, and that's an excellent point, and that is a perennial problem. And I have to confess self-interest here in that I trade systems at both ends of the spectrum. I trade a short-term 4-hourly system over a very narrow universe, which is used to generate cash flow. That's all it does. The wealth creation occurs via long-term equities because they're the only things I've come across that can generate that level of wealth over a period of time, where you have a stock that goes up not from $1 to $2, but from $1 to 10 to 15 to 20. And it gives you all these opportunities as it goes along the pyramid into it, and to actually buy more. When you're trading shorter term systems, and what you say is a really good point, because the majority of traders trade for entertainment. They don't trade to be profitable. Is that you've got to delineate wealth creation from cash flow. But what happens is most people go, I'm trading for cash flow. therefore I'll trade short term. That's not the reason they're trading short term. They're trading to be entertained. And if you can get that notion that the market's a casino out of your head, then you can actually do both. You can have one that pays the bills and keeps the lights on, and one that acts as a wealth creation device. And that they can exist. They can coexist in harmony together. And I think for some traders, what happens is that one takes the pressure off the other. So that if they do have a small amount of their portfolio that they trade for cash flow, they're not tempted to begin to disturb or disrupt the long-term system, which is actually generating real wealth. But it's getting over that notion that it's not for entertainment. It's a business, nor is it a hobby. Hobbies are meant to be pleasurable. There are times when trading is really not pleasurable, and it's a really expensive hobby for people who get it wrong. So it's we come back to that thing. It's work. You have to work.
Yeah. Would you recommend people to do this like both at the same time, so trading long-term and shorter-term, or should they start with one and go with the other after?
Look, I think it depends upon the personality. I think one of the unfortunate things is we come back to this problem with noise, is that people fire up their screen. And look, part of the issue is that this space, this arena, is full of people who, if you Google magic trading system, you'll get $56 million returns, and you'll get people saying, and we have them here in Australia, give up your day job, start intraday trading with $10,000 using Bitcoin. What the hell? How much are you going to make per day with a $10,000 float? Unless you leverage the entire thing up to 100 to 1. And then that's not going to last long because you're playing double or nothing and you only need to get it wrong once. And unfortunately, that's infiltrated the way people think. And people's attention span has gotten shorter and shorter and shorter. And so they're attracted to it. This is why retail FX has become such a big thing, because FX is beautifully fractal in that it's self-repeating over different time frames, which means you can trade it using 1 hour charts, 30-minute charts, 15, 10, 5, 1. You can use tick charts that trade every transaction that go through. And that's wonderful for people and their short attention span. But it doesn't answer the primary question. And the primary question is, why are you trading? Are you trading to get rich? Which is, let's be honest, the underlying current, or what people perceive to be. Well, then the way you're going to do that is to find a way to keep the lights on, pay the bills, but also generate wealth. And my recommendation is that people generally start at a higher time frame and work down, not at a shorter time frame and work up. So they start weekly. They might wind down to a small universities daily. They might wind that down to an even shorter time frame. But there is a caveat. You can't trade very short-term time frames if you have a job, because you have to be available for when the market is available. So if you're trading 30-minute charts, then you need to be available when the market is available. If you're trading 30-minute charts, trading the S&P 500 E-mini, well, guess what? For here in Australia, you're going to be up all night. That works really well if you don't have a job. If you have a job and a life, it doesn't work very, very well. So everything in trading is a compromise. Yes, you might want to do it that way, but at this stage of your trading career, might not be able to do it because of the simple fact that you have an impediment known as a job. Why do you need the job? Well, the job pays the bills. Despite what people say, you can't give up your job and make $10,000 a week trading Bitcoin with $10,000. That's a wonderful advertising spiel, and they're all over Google, and we see them all over the place here in Australia. But it's not reality. And all of this has to be tinged with reality. That we come back to it again. Trading is work.
Totally. But I think that the other thing people don't really learn and don't think about is that they will have to evolve over time. They will have to evolve their style and how they trade. And that means that if they learn to evolve, to go from higher time frame to lower time frame or vice versa, that they can do anything they want. But they got to be able to learn how to evolve and change.
And that's in a nutshell. You need to have that capacity to be fluid within yourself and to evolve.
Yeah.
And that's a really good word, is evolve. If you can't do that, you can't change, if your personality is not malleable, then you're going to struggle with trading completely if you can't evolve as a person.
Mm-hmm. Mm-hmm. Do you have any tips on that, on how to do this more easily? Or is that something that is based on the person?
Yeah, that is an immensely difficult question, because everybody makes the same mistakes in trading. So everybody's trading journey is almost identical. The mistakes I've made will be the mistakes you've made, which will be someone else's mistakes. We all do the same things.
Yeah.
But the journey itself, how we get to those points and how we deal with them, is so idiosyncratic and so individual that unfortunately there's not a single sort of, here, read this, that'll work, thing. The only things I can sort of throw up for this sort of thing are a series of words. And the words are the ones we've spoken about: fluidity, resilience, courage, effort. And I'll throw in the word grind, because, and I'm certain you've had this experience as well, and I'm certain everyone you've spoken to has had this experience where people have gotten partway through their trading career and they've just gone, it's just too hard. And at that point, most people give up.
Yeah.
Because unfortunately, particularly nowadays, we're deconditioned to things that are difficult. We don't like things that are hard. And so we tend to balk at anything that is hard. Getting up early is hard. Having cold showers is hard. Going to the gym early in the morning is hard. Not being a dick is hard. Eating correctly is hard. We tend to shy away from all of those. Trading at times is very, very hard. And everybody at one stage is on to go, that's it, I've had enough. I don't know what I'll do, but I'm not going to do this. Those who get through that point are the ones who become successful. That's with anything else. It's like any career. There are points in everybody's career, irrespective of what it is, be it probably sportsman, actor, performer, scientist, lawyer, businessman, entrepreneur, where they've just gone, too hard, I'm going to quit. And they do. But the ones that don't quit, and admittedly we see survivor bias as an issue, are the ones that make it. And it is just that you keep leaning in, you keep making tiny course corrections. And they are tiny course corrections. They might be 0.5% here, 0.5% there. And you find a way through the maze that is presented to you. But you've just got to keep going. You've actually got to be too stupid to stop, I think.
That's a good point. And that moment can happen a few times. It's not only once. Like you might be tempted to quit a few times.
Look, it's not only once. I'm about to update my blog with the results of a highly leveraged version of my 4-hour system. It's really highly leveraged. And it, as all these things do, went immediately into drawdown, then took off. And then it's been in drawdown for almost a year, and it's just been recovering. And when it was in drawdown, I'm sitting there thinking, why am I trading this system for in this way? I know it works in this way, so why am I putting myself through it? So it's often a repeating question that's thrown up to you. Why are you doing this? What is your motivation? What are you getting out of it? And you're going to have to answer that question over and over again. But if you're able to answer the question, take a deep breath, have a pause. And a pause is a powerful thing in trading and in life in general, where you just sit and go, okay, now we're good. Then you can push on. And everybody goes through the same trauma of, you stand up, you get knocked down, stand up, get knocked down, stand up, get knocked down. It's the same way for everybody. It's just the way it is. So deal with it or go home.
That's awesome. That's been awesome interview so far. So how can people find you if they want to connect with you or reach out after this podcast?
If you want to connect with me, just go to tradinggame.com.au and you can find me there. You'll find my blog, you'll find the things we do, you'll find audited results of some of the systems we trade. That's where I live.
Awesome. And you also wrote a few books. I guess you're on social media everywhere also at the same time. People can follow you there.
Kinda, sort of. My business partner, Louise Bedford, who you've spoken to, is all over social media because she's just all over it. She knows how it works. I, being slightly older, stare at it and go, what does it do? I don't know. Things. Here, you do that because I can't.
Delegation, which is awesome. Cool. So what kind of goals do you have for the future?
My view is I tend to default to an old saying, which I must admit at the moment I can't remember whose quote it was. And it is that tomorrow will be the same as today, but different. And I think that's life in general. And I think it's markets in general.
That's awesome. So, Chris, thank you so much for being here on the podcast. It's been a pleasure to have you here. And people should reach out to you, should follow you on your site and everything. I think it's a great resource. And thank you for the work you're doing also. And I will catch you guys pretty soon.
No problem. Thanks, Etienne. It's been great to talk.